Hey everyone, I want to welcome you to today's episode of the HX podcast. I'm very pleased to have a very, very interesting guest today, someone I've known for about a decade. His name is Jason Napodano, and he runs a research firm called Bio5C. And the research firm focuses specifically on biotechnology stocks, which I think is just a fascinating area. But first off, we'll jump into a little bit of that. But how are you doing today, Jason?
I'm doing well. Good to be here.
Cool. No, I appreciate it. And just one disclaimer, I've had terrible asthma, so if it sounds like I've been smoking or like 10 cigarettes in a row or something, that's the reason why. And so I met Jason through one of my business partners, and we generally call him JNap as a moniker. But let me give a little intro on why I was so fascinated to have this particular episode, and then I'm just going to hand it over to you, JNap. Biotechnology stocks, when you look back at the best returns, the most number of stocks that have gone up 500, 1,000, 10,000% across the last 30 years, it is just littered with biotechnology stocks. Like there's just a ton of these out there, especially when you look at companies that go from 50 million, 100 million, 250 million to 2 billion, 5 billion. It seems like that's kind of the sweet spot, the like micro cap to the mid cap, and then eventually maybe it gets sold to a mega cap. And, I've had the benefit of investing alongside JNap here, as well as my buddy Ed. And it's a very interesting area that it seems to me, like my experience, which has been very positive, but it's like you take 5 stocks, two of them go to zero, one goes to zero, one goes down 50%, one of them's flat, you make 20% on the other one, and the last one's up like 500%.
Yeah.
So you end up with a great IRR. It's not a great way to sleep at night, but it's also like such an esoteric, if we're talking about, like I just did a write-up on an oil refining company. Okay, I can understand oil refining. Like that's, you take the crude oil, you put it in the refinery, out comes the gasoline, all this stuff. But so what I wanted to do here, JNap, is just sort of have you give a guide, and I'll give one last example, and then I'll shut up here. We have a person that works with us that's helped start this business. Very successful business person. I don't know how much he's worth, tens of millions of dollars. He works in an advertising business, but he's very interested in biotechnology stocks. But I also know he has no biotech, no medical background, no chemistry background, but it's a very interesting area, and he's done quite well. So I'm going to ask you actually maybe to kind of give us what you would consider the ABCs of, biotech investing. If you're an investor and you look at it and say you're a smart investor, you understand stocks, you understand trading, you understand all this, and you look at this area and you say there are big returns here. How do you begin to tackle it? I obviously subscribing, and just one last thing here, Jason has a subscription service called Bio5C. You can check it out. I encourage you to subscribe. But in addition to subscribing to your service, how do you tackle this? Maybe take it from the top down, and show us the way, my friend.
Yeah. Well, instead of the ABCs, I'll give you the 5 C's. Because that's what.
There you go.
Work that in. So that's what.
Don't make me laugh too much. Don't make me laugh too much, because if I start laughing, I'll start coughing. So that just about happened. But that was pretty funny.
Yeah. Again, appreciate being here and being able to kind of share Bio5C and the process with you. In terms of biotech investing, I mean, you're right. If you bat 50%, you're probably doing pretty well. What you probably need to do more than just look at, winners versus losers is that overall return, because if you do have a portfolio of 5 to 10 stocks, there are going to be ones in biotech that do legit go to zero, or they do go down, 50%, 75% on some data readout, or some event, some presentation and so you have to be aware of that. And it takes a lot of discipline to make money in biotech, because to cancel out those ones that go down 50% and 75%, you got to have a bunch of ones that go up 100% or 500%. And oftentimes, retail investors will hold on to the ones that are down 50% and down 75%. And they'll cut those winners short. Whereas in biotech investing, you can go from, I like to say, zero to hero pretty quickly on one data readout, and you can go from hero to zero on one data readout, because it is so zero sum and so kind of cut and dry.
Binary.
Times. It's not, CVS can open up a store on this corner of the street, and Walgreens can open up a store on this corner of the street, and they can both do well. In biotech investing, if you're, you've got a drug for cancer, or if you've got a drug for, arthritis, why would you take a drug that only gives you 50% benefit if there's another drug that gives you 75% benefit? So it really, things move very quickly. It's very complex, and you need to understand not only science and medicine, but the business aspect of biotech investing and the financial aspect and the competitive aspect that I think, kind of gets lost. And so that's why I've started Bio5C, because 5C, I believe there are 5 areas, and there's probably more than 5 areas, but there's 5 areas that I try to focus my due diligence on. And those C's are catalysts. It's very important that if you're going to be a biotech investor, you have to be aware of the upcoming data readouts and the events, because like I said, stocks can go from zero to hero or hero to zero really quick, and you don't want to be caught off guard. You always want to be aware of what you own, and whether you own 10 stocks or 20 stocks or 50 stocks, you have to know what's coming from these companies, or else you're going to get blindsided, right? The last thing you want to do is turn on your computer in the morning at 8 in the morning and see a press release from a company that you're following and realize that you're down 50% because you didn't expect that news, or you expected the news, but you didn't know what to expect. You didn't have a clear sense of what's good data, what's bad data. So catalyst is really important.
Can we stick with that one? Because we'll kind of dive deep into this. And look, I'm a very seasoned stock investor. I've been doing it for 30 plus years.
Yeah.
Do you, in general, and some of these questions may sound so simple, and be kind to me, like if I say something dumb,
no worries.
But it strikes me from what I've seen is that in general, you have windows where you kind of know when news is supposed to come out, but you don't exactly know when the news is supposed to come out. Is that true with a lot of these test results?
Sometimes companies will say, update coming in the second quarter, update coming in the second half of the year. And so a lot of times they give you a range, or they give you, guidance. Hey, update coming in the third quarter. But often other times you have conferences, and data is coming at this conference. For example, in June, over the next month, there's a ton of activity going to be coming in biotech. You have ASCO, which is the world's biggest cancer conference, usually focused on solid tumor cancers. You have EHA, which is the European Hematology Conference, which is focusing on cancer, but more blood cancers. Both of those are in June. Also in June, you have a conference called EASL, which focuses on liver. You have a conference called EULAR, which focuses on arthritis. You have a thoracic conference at the end of May. So we know when these conferences are. We know abstracts that have been submitted to these conferences. Companies often press release, we're going to be presenting this data at ASCO or at EHA. So it could be data coming in the second quarter, and then you wake up and boom, there's the data, and you better be ready for it. You better know exactly what to expect, or you could know this conference presentation, here's the abstract coming. ASCO abstracts are coming May 23rd. So May 23rd is going to be a busy day for me, because I already know I'm waiting for abstracts from several companies.
Got it. So, but it's not like earnings where like a company will say, okay, our phase 2 trial results are going to be out on September 14th. the phase 2 trial results just come out when they come out.
Yeah, it's
like,
oftentimes
they're supposed to be out sometime ish in the next 6 months,
Yeah.
but then all of a sudden they just show up.
Yeah, I mean,
Right.
because oftentimes these companies are waiting for, they know when, okay, we're going to enroll 200 patients. They know the 200th patient enrolled today on May 15th, and then it's a 6-week endpoint. So then it was 6 weeks from May 15th is the last patient report, last patient data. But then they're waiting for the investigators, which may be at clinical. There may be 100 clinical sites, right? There may be 10 clinical sites, but they're waiting for these investigators to then compile all that data, put it in the database. It's called database lock. Then they clean the data for presentations, and the companies are just waiting around. Sometimes that takes 3 weeks. Sometimes that takes,
but how
6
much
to 8 weeks.
visibility? How much visibility do you have in any of that? You don't. I mean, is it literally? It's just like, and again, I'm simplifying here, and again, be nice. Is like, okay, we're going from phase 1 to phase 2. We know phase 2 should take. I'm making numbers up, so you can correct me. We know a phase 2 should take 18 months. They started 12 to 18 months. It started 11 months ago. Now we should be on the lookout that sometime in the next 6 months, there's just going to be a press release that says these were the results. Is that actually how it kind of works?
Yeah, I mean, every study is different. If you're doing a cancer study, you might be looking for survival or 50% median survival, right? So then you're waiting around for 50% of the patients in the study to die. Could take. That's variable. We don't know when that's going to happen. You could be looking at an endpoint that's at 6 months for some study, for maybe an arthritis study, or you could be looking at a study for, maybe something like atopic dermatitis, where you're going to get an answer in 6 weeks. So every study is different. It's not just, all phase 2 studies take this long, all phase 3 studies take. Quick studies are, every disease is different. Every indication is different.
So when you say catalyst, how does that play a role in your process? Is it that, and I'll put it two ways, is it that you only want to buy things that you know or you believe you have an upcoming catalyst? The second thing I'm sure is true, and this is a big thing we say with all investing, I say it over and over and over, which is plan the trade, trade the plan.
Yeah.
Which is, no matter what your philosophy is, no matter what your process is, you go in, you're doing it for a reason. You have sort of a binomial tree that says these are the outcomes that can happen, and this is what I'm going to do when they happen, and then you damn sure make sure you do them, if your process is sound. How does that kind of fit into your catalyst framework? And then we can go to the second C.
Yeah. So for biotechs, especially for smaller biotechs, I mean, not so much for pharma, but for smaller biotechs, I recommend you focus on names that have near-term catalysts. Now, that doesn't necessarily mean you're going to hold the stock into that data, into that binary event, right? Because that is big. That's big risk.
And how do you know they have a near-term catalyst? I mean, I guess I understand the conference angle.
Yeah.
But this is just a mystery to me. I honestly don't know. Normal companies, I know what the catalyst is. They reported earnings today. They've got a conference, like that stuff I can understand. With the rest of them, is it just sort of the company gives you some level of guidance about where they are in the process?
Yeah, exactly.
Okay.
So, for example, a company just reported their phase 2 data. So they reported the data, maybe they presented at a conference. The next thing they tell you on the conference call, or they put out a press release, they say, we're going to go talk to the FDA in the second half of the year. We're going to design a phase 3 study. That phase 3 study is going to start in the first half of 25. It's going to take 18 months, so we're looking forward to reporting data in the second half of 26. That's not a catalyst, right? That's something that you probably want to, maybe now, tax implications and all that kind of stuff I don't worry about too much for biotech investing. But, if the next event is they're going to start a phase 3 study in the first half of 25 and they're going to report data in the second half of 26, that's probably not a stock that's going to do a whole lot for a really long time. So, but if they're saying, hey, last patient completed May, it's a 4-week endpoint, Now okay, May 15th, 4-week endpoint. That's June 15th. We know it's going to take them 2 to 4 weeks. So we know data's coming in July. So that's kind of the catalyst.
First C, you want to make sure that you have, I'm going to use the term visibility with big air quotes, visibility on a catalyst. Okay.
Yes.
What would you put down as the second C?
Just a little bit more on that. Not only do you want there to be it, but you have to know what to expect, right? These ASCO abstracts that are coming out on May 23rd, I'm not going to give a name, but there's one that I'm really watching for. And I'm watching, and as soon as that abstract comes out, I'm skimming that press release and I'm looking for a number. And I know if the number is, below what I want, I'm shorting the stock. If it's above what I want, I'm longing the stock.
It's just like an earnings report in that
exactly.
way. Like it's it's the same thing. I'm looking at the revenue, the EBITDA, whatever. Okay.
But it's like, how do you know what, if Apple's report is good if you don't know what consensus is, right? Now there's a consensus for Apple's earnings and EPS, but there's not always a consensus for what the overall response rate for a head and neck cancer study is going to be. You have to know. You have to do the due diligence and see what is the standard of care. What are the expectations for this drug? So
first C,
prepare that seed. It's not only important that there's a catalyst, but you have to prepare for it. Okay. Second catalyst, we'll say charisma, and that is. My
second C, you meant to say.
Second C. Second C is charisma. That is my analysis of the science. How exciting and cutting edge and the quality of the science that the company is doing. Now, I'll just say I have an undergraduate degree in biochemistry. I worked for 4 years for a biotechnology company. So I used to be a lab rat. I used to be a bench scientist. I wore a white coat and blue gloves. And I did that for 4 years. Now that does not make me an expert in science.
That could also make you a serial killer, by the way. But go ahead.
It makes me almost dangerous enough to think I kind of sometimes know what I'm talking about. But I still can understand enough of what's out there and how drugs work at a level where I can. When I'm doing my due diligence, I can tell you whether or not what they're doing makes sense. And so charisma to me is very important. And charisma is how exciting is what they're doing. Is this the fourth drug that's going to come to the market for acne? Or is it a potential first in class cancer drug where there is no standard of care? So keep in mind that, hey, you're the fourth, acne drug to come to the market. That doesn't necessarily mean that's not a good market opportunity. But are you a me too? Are you a reformulation of something that's already out there that maybe is dosed twice a day, and your grand invention is that it's going to be dosed once a day? Or are you doing something that has never been done before that is potentially going to be disease modifying, revolutionize the standard of care in this market, whether it's a huge market or a small market?
Let's spend some time on this topic because I actually call this, we talk back. First off, at HX, we have a very clear view. Stocks are not companies. In theory, when you own a stock, you own the company. But I don't know, people who own Amazon have never seen a cent of a dividend or a cent of cash flow. They've barely been bought back any stock. The stock's gone from 10 cents to 1,000, and no one's actually ever received any benefit from the company other than the stock price going up. So stocks are not companies. So the price that a stock clears at really is just a function of the enthusiasm of the buyers and sellers of that stock. Mm-hmm. And so I sometimes talk about a stock. I call it the sexiness of a stock. Mm-hmm. Is it something think of stocks as products, right? Is it a really interesting idea? Now, ultimately, really interesting ideas that don't have cash flow and go bankrupt, Rivian or something like that, don't end up being very good stocks. But if you have a really good, a really sexy idea, and then it can be backed up with decent to great financials, then you get great stocks.
Yep.
But for this, I mean, so charisma. Is it because you said something else about like a reformulation or something? Those other ideas seem less risky. So if I'm a fourth drug going in, but I've got an improvement, but it seems clear I'm going to be able to do it, that seems to be less risky. So maybe that's lower risk but lower upside.
Yep.
Versus if I'm the first drug addressing some huge market, it's going to be super risky, maybe not, but it's got huge upside. Is that the charisma part of this equation?
That's exactly right. And just because you have, and again, the way I do Bio 5C is there's 5 C's, and I score these things and I add them all together, right? So just because maybe you don't have massive charisma, doesn't mean you can't be a good stock, doesn't mean it can't be a good investment. But one of the things I look for is how sexy or how differentiated what they're doing is, because that is really going to be telling of what the upside is. I mean,
I apologize.
Risk reward.
I've seen some of your reports. Do you actually use an analytical, like a scoring system? I thought I maybe. Okay, so you literally take the 5 C's, and is it a 0 to 10 scale?
It starts at 1 because for some reason when I did this 5 years ago, I decided not to start at 0. So it's 1 to 5 on each of these.
1 to 5.
So 5
you
is
like fives apparently.
5 is an A. 4 is a B, a 3 is a so right. Okay. So if you get a 1, you're at an F, and then I do that for I probably got 150 stocks in my box right now.
So we look first for a catalyst. We then look for charisma, which I'll call sexiness. What's the third C?
Credibility, and that is really an assessment of the management team and the mechanism and has this worked before? Has it not worked before? So that kind of gets into a little bit. Sometimes charisma and credibility aren't necessarily the same, because it could be a highly credible management team. It could be a CEO that is that you feel has a solid grasp for the disease, the mechanism, the drug, the market, gets on conference calls, presents a fair assessment of the opportunity, doesn't BS, doesn't lie, right? Doesn't do all the things that you kind of roll your eyes at sometimes when you see in biotech stock. And it's a highly credible because it's a reformulation of a drug we already know works, but maybe there's really not that much charisma there. Or it could be the opposite. Okay. It could be in biotech investing, man, I was just on a conference call this morning where the press release kind of painted one picture of the efficacy of the drug, and then when you looked at the slides and you really delved into the data, you said maybe that's not as great as the press release made it seem. And there was a name last week. We're on May 15th, so the biotech investors are going to know what I'm talking about. There was a name last week where a stock was trading at $4. They put out a press release that painted one picture that really made it seem like this was good, this was something interesting, and the stock went to $8 or $9 at 4 p.m. to 5 p.m. Conference call started at 5 p.m. The slide deck came out, which gave you the full picture, right now the stock is $2. So that to me,
and by the way, JNap, you can use names on this podcast. We talked about making this evergreen, but talk about as many names, and if you have great fucking ideas, throw them out, etc. We're not against using names. My goal, and I think that people who watch the HX podcast, my goal here is actually, we have access to guys like JNap that are just absolute fucking assassins in these areas, incredible expertise, and I want them to be able to share knowledge with you that not only is useful for tomorrow and next week and next month, but is useful in 2 years, 5 years, 10 years. Maybe you're going to learn so much about biotech today that in 25 years, you're going to go back to that conversation with JNap and say, oh, I remember that podcast with Enrique HX podcast, and these are the 5 C's. So don't be afraid to throw names in there. there.
Well, so credibility is incredibly important, and I track that, and I get a sense. So if I don't know, if it's the first time I'm covering a company, I'll try to talk to some people. I'll try to go back and I'll look at their history. But the more I follow a company, and I've been following companies, several companies for decades, the better sense of the credibility that I get, the credibility of the management team, and right? So the next time this company puts out a press release, I'm going to know, because I'm going to have it in my notes, that these guys are a little sketchy, right? They do things like that. They put out press releases and they don't give you the full, the full story, or they. So when you're doing a clinical trial, you have a primary endpoint, right? What is your primary endpoint? Your primary endpoint is, let's just do a cancer study. It's survival, right? And so when they put out the results and their drug had a survival that's no better than the standard of care, you would say that failed. But sometimes in the press release, it'll say, well, but people who were wearing blue shirts and sneakers and took the drug at 8 a.m. instead of 9 a.m. had a longer survival. And it's like that kind of stuff happens in biotech all the time, right? There are always a lot of these CEOs, and a lot of these companies are constantly looking for ways to kind of keep their programs alive when maybe they shouldn't be. So that's the kind of stuff that I see: post hoc analysis, changing the endpoints, changing the time. We were going to have data. Like, company puts out a press release, says we're going to have data in June, and then in June they come and say, well, now it's going to be in July. And then in July, well, now it's going to be in August, right? Or what they said, in May, they said we're looking for 50%. And then it comes out in June and it's 40%, and they're claiming victory. So
I have two analogies for that. One is, like, in our investing, we very much look at performance versus expectations on earnings, revenue, whatever metric is relevant to the stock. Mm-hmm. And, my view is, people say, oh, this is a good management, this is a bad management. I'm like, none of us have any fucking idea who's a good management and a bad management. I've never run a trucking company, so I don't know who's a good trucking company management. But I know if I've got a company that across 37 quarters said they were going to do X, and then they did X plus 1 37 quarters in a row, the vast majority of the time, those are good managements. So, we look at it that way. But there's something else that you're kind of going to, and I encourage you to check these guys out. There's a newsletter out there called Doomberg. Have you ever heard of Doomberg? I think we spoke about them the other day. Yeah. And so they basically are kind of these, it's climate energy related. But what they do, they actually, I think there's 5 categories too, by the way, where they take claims on, like, SMRs, small nukes or fusion or anything out there. And then they have sort of this category of, like, how credible is the company? What does the data look like? All these different things. So it sounds very much like the approach that you're doing, and credibility is one of them. Okay. Yeah. So we've got remind me, what was the first one? Catalyst. We've got charisma, sexy. We've got credibility. What's the fourth one?
Capital structure.
Okay.
So here's where Bio5C...
This one I can understand a lot easier.
Yeah. So I'll do the last two together because they kind of go hand in hand, although there's little aspects of each that are different. So the final two are capital structure and cash. And here's where Jason Napodano takes off his biochemistry background and brings in his MBA and former chartered financial analyst background. So after I left the biotech company that I worked for 4 years, I went and got an MBA, MBA in finance, and like I said, former chartered financial analyst. And the reason why these two aspects are so important, and almost as important, if not sometimes more important than the charisma and the credibility, is because in biotech is a business, right? And people can know medicine really well, right? MDs are going to know the disease. They're going to know the standard they're going to know how they treat patients. Yep. They're going to know what they want to see. They're going to know the unmet need. The PhDs and the medicinal chemists and the organic chemists, they're going to know the design of the molecule, the PK, the PD, the binding, how this, how it compares versus existing drugs on the market. But notoriously, doctors are not such great investors in biotech stocks. And that's because they tend to only look at medicine. Now, if you're taking the long game, if you're saying this drug, this is a drug or that is so well designed that I think it's going to work, or this is the disease that is such an unmet need, and the way they're treating this disease is so interesting to me that I think it's going to work, and I'm just going to buy this stock and I'm going to come back and look at it for 5 years, maybe you'll be right. But the problem that I think a lot of doctors have and a lot of even PhDs have in biotech is they miss the whole second half of, does this company have enough cash to fund the clinical trial to prove your thesis on the science correct? And the cash and the catalysts work hand in hand together, because if you know that the next catalyst is coming in December, right? Big cancer hematology conference in December called ASH. You know, this company's probably going to have data at ASH. If they're putting out their press release for first quarter results, which are happening this week and last week, and in that press release it says cash until the third quarter of 2024, you now have a mismatch. You now have less cash than you need to get to that catalyst. So that immediately gets flagged in my model as something that, you need to pay attention to, because these companies are constantly diluting investors, and they're constantly doing it by issuing shares to raise cash to fund the clinical studies. And that's the business model. So you can't knock them for that. But a lot of times companies don't do a very good job of managing that. And that goes back to credibility. All these things are intertwined, right? If you're a management, if you're the CEO or CFO, and you've misaligned or you've miscalculated the amount of cash that you have relative to your upcoming catalysts, well, you're going to get dinged on cash, but you're also going to get dinged a little bit from me on your credibility, because you didn't have the foresight to understand that you've got, $50 million in the bank and it's going to take you $100 million to prove your drug works. So that's so important, is to keep an eye on the financials. And so every report that comes out, every model that I built and every analysis that I do always ends with looking at their balance sheet and looking at their cash flow statement. So what is the fourth and fifth C exactly? The cash position. And the way I score cash is kind of two different ways. It's an absolute number, right? Do they have $10 million in the bank, or do they have $1 billion in
probably
the
the
bank?
cash burn, right?
It's more relative to the burn, right? So anything less than a year starts to get a little sketchy, a little risky for me, especially if the catalyst is coming, beyond that time frame. If they've got 4 years of cash, and they've got $300 million in the bank, and I think the next catalyst is only $100 million away, we've got no issues, right? So I'm never going to buy a company just because they have fantastic cash position. You may, and a doctor and a PhD may buy a company because they've got a fantastic drug. I've never heard anyone tell me, this company has the best cash I've ever seen.
6 years of cash, so I'm just going to buy it.
That's not an investment, but it absolutely is a potential disqualifier. So it's very important.
So this is all very logical. So let me just wrap my head around this. The catalyst, I understand. You want to own stuff that has a catalyst. The charisma, and in order to understand whether it has a catalyst, you got to be a bit in the weeds. Again, unlike a regular company that has earnings reports. I know these companies have earnings reports, but the catalysts are not necessarily.
The catalysts
clear.
are the data.
The charisma, I get a little bit, but again, you have to have some real, an average person, I think can tell a good retailer versus a bad retailer, kind of, maybe. I don't know. At least, I guess to a certain extent, the sexiness, you can look at a TAM and then look at the how the company's growing. Like, I'm comparing it to a normal company, right? If I got a company, we're looking at this company called Nubank, which is like, addressing online banking in Latin America. I think eventually expand here. It's got this huge TAM. They're crushing numbers, et cetera. I can get my mind around how sexy that is. The biotech stuff's a little bit harder. Credibility, you really got to know the people. The last two, cash, and what was the very last
so
one?
So the last one is capital structure, and the capital structure. I look at the capital structure two ways. And a lot of times when these companies are raising cash, they do it by issuing shares. But if you're a dollar biotech stock and you need to go out and you need to get institutional support, you need to get specialist support, sometimes they need to include warrants, they need to include converts. Sometimes you have deals where the warrants will price at one, have one strike price, but then there'll be a covenant to that says if we raise cash again and it's below this price, then your warrants go down to that new price. And so there's a lot of times a hidden dilution. When I value companies, I don't look at the stock price. I look at the market cap. And I think that sometimes maybe that gets lost on retail investors as they look at a dollar stock and they think it's cheap, or they look at a $50 they look at a $50 stock and they think it's expensive. But what's more important, and this obviously, is what is the enterprise value? What are you actually paying? What is that dollar worth? And so sometimes it's $1, but if you include the debt, the warrants, the options, the converts, all of the ratchets and all the other stuff that's coming, it's, the fully diluted market cap may be twice what you're seeing on Yahoo Finance. And so that's something that really factors into my model.
It's a fascinating space for me. I'm going to tell you a random story. This just comes back to me. This story doesn't even, but a buddy of mine, who went on to become a very successful internet entrepreneur, went to Wharton with me, and he actually went and he was working at one of the big banks, I think Oppenheimer, and he went and interviewed with one of these, because there's a dozen funds out there in biotech that are like the mega funds that, and it's not even that they manage tens of billions of dollars. They generally only manage about $1 billion or $2 billion, because I feel like that's all you can manage. Yeah. But he interviewed with one of these guys.
And it gets harder the more you manage too.
That's exactly right. That's exactly right. But I just share this story. He goes in and he does the interview. My friend's very brilliant. He goes in and he interviews with the guy. And the guy's very brusque. This is late 90s hedge fund stuff. And if I told you who the guy is, you'd be like, oh, yeah, that motherfucker's, I can see that happening. And he goes in and the guy makes him an offer. He says, okay, I'm going to pay you $80,000 and you get 2 weeks off, whatever. And the bonus, I'll just decide what it is. And my buddy, who's a banking analyst at Oppenheimer, comes back and says, well, can we make it 105 and can I get 3 weeks off? And the guy literally says, offers off the table. You obviously don't have any fucking clue what we're talking about, because the seat here and what we're talking about, the fact that you're coming to me and asking for $10,000 more dollars, you are a fucking idiot. You do not understand this business at all. And he rescinded the offer, by the way. And by the way, my friend did very well, but he would have done very well there. Anyway, sorry, biotech story from my own listeners. But so let me get into this though. This area, I mean, damn, it's very hard. I feel like the reason why there's so much money to be made by the specialists like you, like this handful of hedge funds, is that it's so esoteric, it's so binary, it's so specific that for an average investor or an ordinary investor, unless they really attach themselves to that expertise, I almost just wouldn't fuck with it. And let me take a step back here. Like what we do, we have a bunch of strategies. We have trading strategies, which we explain They're very systematic, and anyone can understand them, and we trade all kinds of stuff. I have investing strategies. I purposely go for companies that people can understand. Like we right now, we've had this stock that we put out there, Talon Energy. It's a power plant company. They own the 6th largest nuke. It's really easy to understand that power is going up because of AI. There's demand can't go, supply can't go up, demand, et cetera. And so I feel like, my view is I take the thing, the old saying from Jesus or whatever was in the Bible. If you teach a man to fish, or sorry, if you give a man a fish, he eats for a day. Teach a man to fish, he can eat for the rest of his life. My view is that for our strategy for HX Research, it's like I'm going to teach you how to fish, but I'm going to do it at a really tasty fish restaurant where once or twice a week we're going to feed you up awesome fish dishes. So if you want to go fishing yourself, you can, but you can just eat the fish that we're giving you. I don't feel like biotech is this way. Like I don't, it seems to me that unless you attach yourself to like experts that really have, insight, it just like, while the returns are great, it just seems very difficult. I mean, am I wrong with that? Or how should I approach
it is. I mean, I've been doing Bio5C for, probably 5, 6, 7 years now. And I mean, it's a full-time job. In my Google Drive, which is where I build all my models, I've got 300 different models that I've built on 300 different companies, and I've got disease-specific models. So not only am I tracking individual companies, but anytime a company puts out a results in melanoma, not only am I updating the company that just put out the results, but I'm going to my melanoma file and I'm updating the melanoma file so that I know how does that compare to the other 10 companies that are developing drugs for melanoma. And if you're not doing that, if you're just listening to the company and just looking at the press release, you're going to get whipsawed. You're getting 5% of the story because there are so many games that companies, companies will put out a press release and they'll say, hey, our drug did, and I'll just keep it simple, our drug did 50% and the drug on the market only does 30%. And then you may look at that and say, that's fantastic. But what they didn't tell you is that there's a competitor that just put out data 2 weeks ago that did 60%. So, if you're not aware of that, you're like, well, why is the stock down? I don't get it. The press release says
I'm on your website right now. So by the way, when I turn away, it's because I'm looking at things on my computer.
Yeah.
So, I would say my takeaway for this for an average investor is kind of the following. There's huge returns to be made in this area. There's real expertise, but it's very difficult for an average investor without a significant investment and perhaps decades of time to get involved. Unlike other areas, I had my friend Ram on a podcast the other day, who just does tech, such simple, elegant insights, and he's a total killer. Like he crushes it and all that. I'm not saying people could just be wrong, but he explained a methodology that like anyone could learn, and they could, they're not going to do as well as him because he's been doing it now for 20 years, and he's an engineer also. But it was very understandable. This just doesn't seem approachable. So tell me about Bio5C. What is the product? And we weren't, by the way, we were not doing this, or my intention is not do this as a sales pitch for Bio5C. I actually wanted to listen and hear how approachable is biotech investing. I mean, my approach has been, as I told you, I go like what you and Ed say. I usually just have like 5 to 10 allocations of money, and I go and take, 1/5 of the allocation and put it in one of them. And then when you guys say do something different, I do it. And I'm doing pretty good with it. But what is the product Bio5C? How often does it come out? How is it structured? How does someone subscribe? And then I guess and I'll put this, and it may be very different. Our products are very explicit with buys and sells. Mm-hmm. Our products are the following. We go out, we tell you, this is what you should buy. You should buy it up to this point. Here's the narrative. Here's what we're expecting. And then as things change, if it's, we get to a point where we've made profits or we believe you should get out, we say sell. So our products are very like, if someone wanted to, they're really built that you could literally just take the newsletter and say, okay, I got the newsletter today, I'm going to go buy this, and then just not pay any attention until you get the next one, the one that says sell that stock or whatever. Tell us about Bio5C and how that's structured as a newsletter product and, or as a research service and all that.
Sure. So like you said, appreciate that. You can go to the website, bio5c.com, number 5. The gist of the product is that I'm taking this 5C analysis, right? And I'm scoring these 5 categories. And then I am essentially ranking those to what are my best ideas in terms of what names are scoring the most. Now, what I'm also doing is I'm building models. I'm building valuation models on these names. And sometimes I'm using, if a name scores really well, it'll be a name that I'll delve into more and build a more complex financial model, whether it's a discounted cash flow model or what. But I'm getting some kind of valuation. So, secondary to does it have great, charisma and is management team credible? Do they have enough cash? Is what is this worth, right? So I'm also including that into the analysis. And I'm scoring, and I'm doing this on over 100 stocks, probably 150 stocks. And in real time, my subscribers can go to my website and they can see the rank of my top ideas ranked from the best idea that I have right now to the worst idea that I have right now. And the worst idea I have right now is a short. So if you want to go short, if you're looking for shorts, Bio5C is a long short product. So if you came to me and said, I need to short some names, the whole bottom, third of my rank is stuff that I think can be shorted.
So would the approach be if I said, okay, I'm going to go, you've got a great track record, I love your stuff, and I'm going to go and take 5% of my portfolio, 10% of my portfolio, and devote it to this area? Would it be to just go in and say, okay, I'm going to go buy the top 5 or 10 by the rankings, by the scores?
Yeah,
is that kind of the approach?
That is the Bio5, and I'll call it the Bio5C investor. That is the strategy for the Bio5 for your friend who's very successful, advertising. He wants to build a portfolio of biotech stocks. He doesn't know where to start, doesn't know what names to look at. I've got a ranking of 150 stocks, and the top 10 are my top 10 ideas. Now, these are moving in real time as the stock prices are moving. It's all linked to quotes.
So do you send out updates though when they move, or is it someone that has to go? Do they have to go in and kind of monitor it and rebalance every week?
Yeah. So I've got a message board essentially. It's actually a Discord, and so the Discord is where the day-to-day stuff is taking place. But if you just went to the website and just clicked on the rank, you would see every day that's, like I said, it's getting updated in real time. And it's, it is a 100% a formula. And so I think of the top 10 ideas, if you put money into those top 10 ideas and you came back a week later, the top 10 may be slightly different. Maybe, 8 are still in the top 10. Maybe 1 or 2 moved up based on some news that happened. Or maybe the stock I told you to buy has doubled in the past week. And now it doesn't score as a top idea anymore because, the stock has doubled. So that is the gist of the Bio5C investor. If you're a biotech, if you're interested in biotech, or if you're an expert in biotech and you just kind of want to see, maybe Jason's covering some names that I don't know about. I've got a whole rank of ideas. And I also, from that, I've built a portfolio that I try to run as a true, real-time portfolio hedge fund of my ideas. So you've got the actual ranking of ideas, and then from that, on a daily or weekly basis, I am buying and selling stocks in an Interactive Brokers account to try to kind of show actual performance based on that, and my performance is on the website. I think it's pretty good. So
No, this is cool. This is interesting. So look, we'll wrap it up here. I encourage you all to check out Jason's product. I find this area fascinating. there are areas. How would I explain? I'm actually going to go back to Talon Energy, which is the name that I mentioned before. Talon was a utility that went bankrupt and came out of bankruptcy and trades in the pink sheets, on the over the exchanges. And I happen to have followed utilities since the late 1990s. And so there are all these little weird things that if you followed it for 20 years, you just could cut through on Talon and it was like, oh, boom, 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 boom. And I got right to like, this is an awesome idea. I think that without having 25 years of experience covering utilities and doing post-bankruptcies, Talon would be a difficult idea for people to get into. I feel like biotech, the whole thing is like that. So, what I would say to our listeners and our readers is that I personally do think this is an area worth investing time and research into getting to know it, but it's a very unique one that I would say you want to partner with, whether it's Jason, whether it's some other newsletter writers out there, and I don't know of any other ones, but you really need the guidance. But the returns are there, man. I mean, when you look at you look at the best returns in the market across the last 30 years, I mean, first off, they're all technology. It's just a matter of whether it's technology and software, the internet, telecom, believe it or not, retail, or biotechnology. It's like pharma is all technology at this point. So I think it's a really interesting product. Well, I appreciate you taking the time, JNap. And again, people can access bio5c.com. Are you active on Twitter? Are you active on any of the socials?
I am on Twitter, and my Twitter is just JNap 5C. But what I've got, and I like the way you say partner with Bio5C or partner with Jason, because that's really what I feel like my service is. I've got where I'm active all day long is my Discord, and so
got it.
The fantastic thing about the Discord is you're getting, you subscribe to JNap. I've got all the models and all of the information and all the analysis that I do. But just online right now in my Discord, I've got 32 people online in my Discord. And
got it.
Among those 32 people are some really smart people, some experts, some specialists, some people that don't want you to know who they are.
You have to be a subscriber to be on the Discord.
You have to be a subscriber to go to the Discord.
Okay.
But the analysis is... It's not just coming from it's mostly coming from me, but it's also coming from some of my subscribers, and we're just constantly all day long bouncing ideas and partnering with each other, to make money. And I think that's really one of the great aspects of the service.
Okay, cool. Well, Jason, I really appreciate it. And look, I'm very honored that you joined us again. I think this area is totally fascinating. It's just so peculiar, right? Is like I've traded just about every area of the stock market, and I have methodologies that I'm very comfortable going from refiners to technology, whether they're trading methodologies or investing methodologies. I'd say 90%, 95% of the stock market, I've got trading methodologies or investing methodologies that are sound and repeatable, et cetera. And the 5% that I don't is biotech. So I think there's some incredible returns, but that's why the returns are there, by the way, because you have to have people like JNap who have this experience, that have this expertise. So check the product out. We appreciate it. We'll have you on. Maybe next time what we'll do is we don't do this that often. We'll go through a couple ideas, and everything, and maybe that'll be an interesting follow up. What I think would be really cool. Maybe in a month or so, is to have you back on and go through maybe a couple of your best ideas, but do it in the context of your framework. So it's as much about sharing the idea or share whatever ideas you want. It's as much about educating a listener on how they should be looking at this world as it is what is the actual idea. Again, it's my you're a little bit like me, right? It's like I want to teach people how to fish, but I serve up tasty fish in my restaurant. And your fishing is a little bit more difficult than mine. It's I think it could be an interesting exercise. So cool. Jason, appreciate your time.
Enrique, thanks for having me. Fantastic.
Yep, and everyone, HX Podcast. We're on Apple, Spotify, all that stuff, YouTube. The video will be out, with everything there, and we appreciate your time.
Great. Thanks.